This is a Stock Trading Reality Podcast, episode 30.
So like I said, it was just a constant up and down, make a bunch of money, lose a bunch of money. It was just over and over again.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. His first job was as a bat boy for the Toledo Mud Hens, Clay Trader.
It may sound familiar. I don't want to say older folks, but those that have been around a while. If you remember the TV show MASH, one of the characters on there would always wear Toledo Mud Hen stuff. So that's how they kind of got quote unquote world famous. But yeah, I grew up right around the area where that's where the team was. So one of my first job, or actually I guess my first job was as the bat boy. And it was a pretty cool experience because a little more context, that is AAA. So right after that, they actually go to the major leagues. And they would go to the Detroit Tigers. So, it'd be cool to kind of be hanging out with them. And then, a few weeks later, if they get called up, you're watching TV and you're like, oh, wow, I was just playing ping pong with that person a few weeks ago. And now they're on, ESPN or, one of the local channels, as a Tigers game. So it was a good little first job. And, it always gave me probably one of the quotes that, I remember and apply really anywhere in life. And we had to help get balls during batting practice. So we'd just be out there with the players. And, of course, in high school, you think I would still think that's pretty cool to be sitting out there with, professional athletes. But one of my friends asked, one of the outfielders who actually went on to get a World Series ring with the Yankees, but asked him, hey, have you ever dropped a fly ball? And he looked at him and he said, do you know who's never dropped a fly ball? And we're like, who? He's like, the guy that never plays. So I always think about that. And even as a trader, as a trader, do you know the trader that never takes a loss? The trader that either doesn't trade or is lying to you, because, losing is a part of the game, but it by no means makes you a bad trader. And it should by no means be a reason why you don't get involved in a trading because you're afraid you might be wrong and lose. Now, losing in an undisciplined way, yes, very bad. But losing in a disciplined way, hey, that's part of the game. So, you can't drop a fly ball if you never play. And, the same goes with trading. So, would you agree with that, Ches? I mean, I think that's a pretty good application of that kind of theory and the quote.
I would completely agree with that. And, for the listeners that care about me and what I did for a first job, I wasn't schmoozing it up with all these, soon-to-be professional baseball players. I was pushing carts at a grocery store at 15 years old. So I guess my job was a little less fun than yours.
You did that as a job, seriously?
I did that as a job, but I also lied
and told them I was
16. Yeah. I told them I was 16. They still hired me. Whoops.
Okay. Because I know in one of the other fun facts, I talked about that job where I talked with the CEO during the trash. But yeah, that was my job. I pushed in carts from the parking lot all day long. So I'm very good at pushing in carts from parking lots. I can take like a lot and I can stare. What was your record? How many carts did you handle at once?
I had a lot, but I also had a track record of almost taking out a couple cars that just would conveniently try to, drive through my path. Because once those babies are rolling, that's just straight up physics right there.
That's basic physics there. That's physics. There's no stopping that. And, it's a shame that grandmas don't understand physics because I don't know how many grandmas I ran over with those carts. But I'm glad the store had a good liability policy because, I ran lots of science experiments. What's faster, the momentum of these carts or grandma over here on her motorized cart? So, interesting results. But all right, well, I need to get back on topic here. Let's get to the interview. Today we are talking with Yansky. That's what he goes by in the chat room. Adam is his first name. So I think I go back and forth within the course of the interview. I'm calling him by his first name and his nickname in the inner circle. But for those of you that have been members for a while and hang out and participate in the chat room, I'm sure you've seen his name. I mentioned this in the interview, but I really like, Adam just because he's very transparent. He posts his winners, which is great, but he also posts his losers. And, he had a couple rough losers, and we kind of got on his case for that. But since then, he's been doing a very good job. And he still has losers, but they're, very much smaller than his winners, which tells, me and the community that he's doing a good job from the risk management perspective. But he's got a super interesting story. He actually had some very good trades, and you'll see, kind of where that led him. But let's just get started with the interview. I think everybody is going to enjoy it for sure. All right, Adam Yansky. We just discussed this. I think I'm just going to go with Adam throughout the course of the interview. But welcome to the show.
Thank you for having me.
How's it going? We had a little internet issues beforehand, and but I think those are all smoothed over. So besides that, how's your day been going?
Day's been pretty good.
Pretty good. We
Yep,
were
up and
talking,
down.
started off a little rough, but it sounds like you made a good recovery.
Yep, absolutely. From
Absolutely.
$630 in the hole to $56 in the green, I'm happy with that.
How did you get $650 in the hole? Let's talk a little trading right off the bat.
Well, I actually I went long on a couple positions, or actually I went short on a couple positions as far as like Google and Amazon, and the next thing you know, they just broke up and just kept on going. So I switched up.
Ah, yes. This morning to provide that makes sense. This morning, tech stocks big gap down, and then they just came roaring out of the gate. So actually, negative 600, knowing the context of the situation that you were playing tech stocks, that actually makes a whole lot of sense. So let me ask this: if you had been undisciplined or started to, average, how big you think that $600 loss would have turned into?
Well, it probably would have been a couple thousand.
So, yeah, listeners, right off the bat, that's what risk management is all about. That's why you should be good at admitting when you're wrong as a trader, because if you don't admit you're wrong, you could have what's a $600 loss turning into thousands of dollars. So, hey, good job, Jan. Way to deploy some discipline.
Thank you.
So let's rewind a little bit and let's go all the way back to the beginning. What even got you started, in the market? What got you interested? And we'll see where this journey takes us.
All right. Well, when I was in high school, my sophomore year, I was in a class called Career Mathematics, and I had a project that we were going to do where we were given I think it was $10,000 or $100,000 of fake money, and the teacher would bring in newspapers every single day, and we were pretty much at our free will to do whatever we want, pick as many stocks as we want, or invest it all in just one. And after 2 weeks, we were going to see how it turned out. Well, that was my first introduction into the market pretty much, and I ended up doing really well. In fact, I was one of the best out of the class. So that's kind of my first initial taste of the market with paper money. And then about 5-6 years ago, I I basically, have you ever heard of Barter Kings or watched that show Barter Kings?
I have, yeah, where the storage units and stuff like that.
Yeah, so that was on, and I was starting to learn about Craigslist and how everybody's trading all this stuff and whatnot, and things started getting real slow at work. So first thing I did was I basically sold everything I had a loan on and paid it off and got myself completely out of debt. So I didn't have to worry about if I did lose my job or got laid off or whatever. I wasn't going to be struggling to pay my bills because I didn't have no bills at that point. So I started trying to supplement my income by selling things on Craigslist or bartering on Craigslist. And, I started off with trading a foosball table for, it was like a $200 foosball table for about $800 bow. And then I cashed out on that and sold the bow for $600. And then I took my four-wheeler that I used to ride as a kid, and I didn't really ride anymore. In fact, it wasn't even really running, but it was only worth about $1,000. And I traded that for a Honda CBR, and that was worth about $2,000. And then I took that and I traded that for, I traded that for a 94 Dodge Durango. And then I finally ended up selling the Dodge Durango for $4,300. So I did a couple other smaller trades, trading paintball gear and stuff like that, but I ran out of things to trade, and I had some extra money laying on the side, and I started trying to figure out how I can still, increase this amount of money I had while I was laid off and whatnot. So I ended up opening up a Scottrade account on October 17th, 2011 with $500. And my very first purchase was the next day. It was a ticker symbol PMI, which I bought 1,428 shares at roughly just under 35 cents a share for a total of $506.73. So the next day I wake up, and this is, mind you, after I lost my job, got laid off, I was looking for other job opportunities, and I was pretty much taking whatever I could find. So I found a job with a roofing company where I became a project manager. And the next morning I woke up after buying this stock, and I went to work, and I got on the roof. I knew the market had just opened. So I went to check my Scottrade app, And within the first, I don't know, 10, 15 minutes, it was up to like 37 cents a share. And I was like, hey, I'm making some money. This is great. Well, about a half hour later, I checked my app and I was up. The stock was all the way up to like 70 cents a share. And I was up like $480. So from there, I ended up trying to rush off that roof and get home as fast as possible to get actually to my computer. And by the time I got home, the stock had plummeted all the way down to 27 cents or 28 cents. So I was then in the red. Well, I didn't sell that day because I figured, it's got to go back up. If it went up, that's much today, it's going to go up tomorrow. Well, the very next day, it ended up claiming Chapter 11 bankruptcy, which, pretty much just plummeted the stock to worthless. So I was pretty much out of money. And
let me just, because I have a bunch of questions about, I mean, this is we've never had a journey that started off with trading, but trading something else. So I know the TV show, so that actually works. I always tell them, like, nobody would ever do that, but it sounds like you must have some good negotiating skills, huh?
Yeah, I would, refuse to sell or trade my stuff for anything that was less value than what I had already. So,
but how did you convince the other people to trade down? Because you were trading up, but how did you get them to convince? How did you convince them to trade down?
At that point, everybody was hurting for money, but everybody still wanted things, so they were willing to trade things that they no longer really used, even though it was more valuable, for things that they wanted. Like for instance, the Dodge Durango. That guy had 3 cars and he wanted a motorcycle, so he decided that, I'm just going to go ahead and take the loss and get rid of the motorcycle because I don't have the cash to buy the motorcycle, and I'm just going to trade my Durango for it. So, just finding people like that, basically, that were willing to take that loss, and I would take the gain from it. So,
man, I want to get Ches. Are you a good negotiator? We might have to go into the try to trade up in life, or whatever that's called.
I was actually just looking through my closet to see what I could list on Craigslist while this podcast is going on.
All right, so you bought this penny. One more thing, how the heck did you get off that roof? Because I did roofing during summer when I was in college, and I worked with some pretty roughneck guys. I don't know how I would have been able to get off the roof and go home real quick. So what was your excuse for that? How did you pull that off, that maneuver?
Basically, I just told the guy that he didn't have no damage on his roof, and he didn't need to worry about any of the hail damage that we just recently, got from a hailstorm. So I just...
I'm picturing this right now. There's water pouring into this guy's living room. Another part of the room's got water pouring into it. Hey, man, no, your roof looks fine. It's flawless. It looks good. I'm out of here. So
I gotta go, though. I gotta go.
I gotta go. It looks good to me. So that's what I'm envisioning. But
I was making more money in the stock than I was selling the deal. So I was
that's just kind of how I could picture that thing going. But so you said you found this stock for 35 cents. How did you find it? What was your quote unquote research message or method to find this stock, which I believe you said PMI?
Yeah, PMI, and basically all I did was get on Google when I opened up the account and started typing in like hot penny stocks and stuff like that. And sure enough, I came across a website called hotpennystocks.com, and one of the tickers that they were promoting, I guess, was saying PMI. So I ended up just picking one, out of random and going with it.
So now, unfortunately, they filed Chapter 11. It's pretty much gone down to worthless. What did you decide to kind of do differently? Did you want to just kind of step away from the market and keep kind of bartering things that you had, or were you going to, put more money in and figure out, a strategy that would, make you money, but maybe you didn't have to be there to kind of, what essentially happened is you missed the pump and you got caught in the dump. So, I mean, what did you want to do after that? After you saw, you had a nice gain, but you lost it?
Well, after that, I basically thought, what would make it really good, or what's a really smart decision, is to actually average down. So I put another $100 Scottrade and bought another 1,102 shares at like 0.037 cents a share. So then I was holding like 2,530 shares of this company that's going nowhere. And the stock pretty much just stopped trading. No one was buying, no one was selling. I was trying to stick to the Warren Buffett motto, never sell for a loss. Rule number 1, never lose money. Rule number 2, don't forget number 1. So that's basically where I was at with that.
Except I don't think Warren Buffett was ever talking about penny stock. So I love when I see penny stock people using Warren Buffett quotes. It's just like, talk about taking something out of context. Warren Buffett quotes in penny land. Yeah, I think if you are a penny stock person listening to this and you are basing decisions off of Warren Buffett quotes, stop immediately. And another lesson here that if it doesn't get any more real than this, penny stocks are like little children. They need to be babysat. If you're out trying to do a regular job, or in Adam's case, like I said, doing a regular job out on a job site, I mean, that's how fast they can turn from being up 100% to then being down in a matter of, an hour. How long did that change? So how long did it take you from you looked at your phone, you saw you were up a big amount, to getting home and seeing you were down? What sort of time frame was that? Do you remember?
Yeah, I was about 10, 15 minutes away from being home.
Are you serious?
No joke.
Wow. So, but that proves the point. They are like little children. They can be in the best of moods, and then they can just throw a hissy fit, and before you know it, it's all gone. So, I'm not a huge fan of penny stocks, but if you choose to trade them, don't get a position, then go take your dog for a walk, or, go to work and forget about it for the next 6 hours, because they can change in a hurry. So a good kind of little example there. But so your average down. What gave you the idea to average down? Was just your own personal, logic, or were you reading message boards and other people were saying, "Hey, I'm buying more shares. This is good prices." Where did that original thought come from to buy more?
Well, basically just to average down in case it did go back up. It was going to be a lot easier to start profiting again. I think my average was 21 cents after I bought another 1,102 shares or whatever at 4 cents. So it was just basically stupidity.
Okay, but it was your own logic and rationale that convinced yourself. It wasn't like you were reading social media or message boards or anything?
Right.
Okay. So obviously, I guess I don't know, but I'm assuming the averaging down didn't work out real well. So first off, how did it work out? And then, where did you go from this point in your journey? What was your next step?
Well, I actually, believe it or not, held that stock for about 2 years, and it finally started making a move back up. And once it started making a move back up, I had roughly $600 into the stock, or into the trade, and once it got to about, I think, 8 or 9 cents, I ended up finally just taking it. It was like $100 and something. So I was happy just to get a little bit of my money back, but I kind of kicked myself in the butt because about a week or two later, it was up to like 32 cents again. So I would have actually been profiting once again, but that's hindsight trading for you. So
let me ask this. So you held it for 2 years. Does that mean you were doing nothing else for those 2 years as far as the stock market was concerned?
No, actually, what happened after I basically saw that PPMIQ, that's what was trading underneath, wasn't doing anything. I decided, I'm going to go ahead and look for the next stock that's going to, make me a millionaire overnight. So during the time, the whole marijuana legalization was for Washington and Colorado was becoming a pretty hot topic. And I thought to myself, there has to be a way to capitalize on this somehow, like many other traders in here, pretty much did. So I thought it would be like if you could go back in time and invest in Anheuser-Busch, Miller, or any alcoholic or liquor company during its prohibition. So I stumbled across a ticker name, MJNA, which was called Medical Marijuana Incorporated. And I decided to deposit another $100 into my account and try another trade. So on December 23rd, 2011, I bought my first 6,400 shares of MJNA at 0.0142 cents a share for a total of $97.05.
This was in 2011?
Yep, 2011.
So you were there early then.
He's there way early.
Yeah, I was going to say, wow, okay. Sorry to interrupt, but I wanted to make sure I heard that date right. 2011, okay.
Yep. So about 2 weeks later, MJNA was at 3 cents a share, and I decided that I was going to try and sell 1,600 shares, just basically to see if I could. I wanted to see what commissions for selling were actually going to cost me, but mainly just to see if selling was actually going to work. Due to what happened with the first trade, I was pretty skeptical of the market right off the bat. So another 2 months.
So you're skeptical to the point of, I don't even know if I can sell my shares. Am I understanding that right?
Yeah, pretty much, because I started reading about how you can always buy, but you can't always sell. So I just wanted to make sure that I could, in fact, sell. So I just wanted to take off a little bit of, my position to see if it was possible.
Yep, the old liquidity trap. It's not the most uncommon at all.
Yep.
So I mean, 2011. You are so early that it just really threw me for a loop there. Because what was that? Didn't we see all this stuff happen in what 2013, Clay? Wasn't that when the big boom happened?
Right when I kind of started things, or yeah. So
Yeah,
it
so
definitely didn't started in 2011. So you were like years ahead of the party.
Yeah. Well, actually, it boomed twice. It boomed right before the election or right after the election, and then it boomed again about 2013. So 2012 was when it was really kind of get going.
So I mean, I'm on the edge of my seat. You have these shares. You're this early to the party. What happened?
Well, another
What
2
color
months,
Lamborghini did you buy? Is my next question. I mean,
well, another 2 months or so roughly passes by, and MJNA was trading around 4.5 cents a share now, and I'm thinking, man, this is great and all, but I'm actually making money. But you know what would make this even better? If I had more shares. So I'm drinking the Kool-Aid and I'm eating up all the PRs and how MJNA is going to be the next McDonald's of its sector, and they're making all this revenue from all their products being sold in medical dispensaries, and how they're projecting that the sales of their products could double or triple even if recreational use becomes legalized. So I decide, you know what, I'm going to go buy another 4,240 shares.
Go big or go home.
yeah, man, load
Right.
that boat.
So now I own 9,040 shares of MJNA, and then I sit on it, and I wait, and I wait, and I wait, and some more waiting. Finally, like 7 months passes by, and MJNA is up to about 7 cents a share, and I'm feeling really good. I'm telling all my friends and family about MJNA and how they're missing out, and they don't want to regret getting in and not getting in, and I basically become a walking, talking pumper.
Well, you're drunk on Kool-Aid, man. I mean, and you admitted to it. You were drinking that stuff you probably had an IV in at this point, didn't you?
Yep, pretty much.
I mean,
So-
that's just, yeah. It's funny how you can trick yourself into kind of, you are future, seeing what the potential is here, what you want it to be, and, what it could mean for you. And at the same time, you just kind of, like you said, you become a walking pumper. So 7 months, though, in that 7 months time, I know you have this stock. Are you doing any other trading at all, or is it just you kind of put this in there and you're kind of letting it go where it's going to go?
Well, that was actually my my main one that pretty much consumed most of my portfolio at the time. But I was buying some other medical marijuana stocks, and there was one called Photo, PHOT. And I bought that one at, I think, like 7 cents or 4 cents a share. And, that one I wasn't, with MJNA, I was planning on holding that for like 5-10 years. And with Photo, I was just kind of trading. And then there was another company called Right Smile, I believe. That
RIGH.
Yep, RIGH.
Yep, I remember that. Yep, I remember that one.
So I bought that at 0.0004 cents a share, and I had like 550,000 shares of that one.
Let me ask you this real quick, because I see it all. I know this is psychology of it. Did you feel like a pretty big baller because you could like tell your friends and family that you own 500,000 shares of a company?
Oh yeah, I mean,
I remember that when I got started. I'm like, so I picked up 75,000 shares of this company today, and I walked around campus like I was some sort of like,
Whoa,
hedge
big man
fund-
on campus.
Yeah, I mean, I'd look at people like, I bet you don't own 500,000 shares of a company, and it's just, oh man, it's funny to look back on, but it's true. Like little things like that totally screw over people. I mean, it like attracts them because they think their logic goes, wow, I can buy a lot of shares of this. That would be cool. I'm gonna do it. That's just such flawed lot. That's just not good. Don't do that. So sorry to interrupt you, but I had to ask just to make sure that wasn't the only person out there that had kind of that sense of I'm a cool guy because I own a bunch of shares. But so you own RIG8, and that was a 0001. So I mean, this sounds like a pretty good portfolio that you have going right now. I think Ches and I, the only question we're thinking of is what colored Lamborghini you're going to buy for us. Because I mean, at this point in time, you're so early to the party. So I can't wait to hear where this goes from here. So keep on going.
I'm in iHub. I'm telling everybody that, MJNA is not going anywhere but up. So at this point, I had a little extra money laying around, and I thought to myself, you know what would be a good idea? Well, you guessed it. I buy more shares. So once again, in October, I buy another 2,500 shares at around 7 cents a share. And a couple weeks later, Halloween rolls around, and MJNA is now at 11.5 cents a share. Well, on that particular day, I was planning on doing some serious partying, being that it's Halloween, and I decided to go ahead and sell those 2,500 shares I just bought. I mean, I felt like making an extra 55% in a matter of a couple weeks was pretty good, and I deserved to enjoy some of my earnings, So a few weeks go by, and election finally comes around, and sure enough, November 6, 2012, Amendment 64 in Colorado passes, as well as the recreational use in Washington. And I'm still drinking the Kool-Aid, and MJA is talking about how they're expanding here and expanding there, and all these other states are going to follow suit, and things are just getting started. So again, 3 months goes by, and sometime in February, it was around 26.5 cents a share, and I'm feeling really great. I mean, I made an awesome decision, and my account has grown significantly. Now my friends are opening accounts and buying it. My mom and her friend are now drinking the Kool-Aid,
no.
so they open an account and buying as well. So from here, I'm thinking, well, if they're buying, I should be too. So I buy a couple more thousand shares at 27 cents a share. And now I'm holding a little under 12,000 shares. Yeah, I get it. Most people average down. No, I average up.
Well, I totally know why you're doing it. I mean, it's going up. Why would you not buy more? Your premise of your argument has been correct. I'm a good investor. I'm a good trader. I bought because I think it's going to go up. Look, I'm right. Why would I not buy some more if I think it's going to go up more? Because I was right in the past. So why not buy? Yeah. So averaging up within penny stocks is very, very common because you've been right. And you have this false sense of, I know what I'm doing. I understand the market. I've been thinking it's going to go up. It is going up. I think it's going to go up again. So the logical conclusion is, why not buy more? So no, man, you're actually not stupid at all because I understand why you're doing what you were. And that's just another effect of the penny stock Kool-Aid. So you're buying more. Now, are you adding to like RIGH and PHOT, or are those ones kind of long gone at this point?
No, they're just pretty much sitting idle. I mean, they're not moving at all, hardly. I mean, when they do, they move, 25, 50%, and then all of a sudden crash 50%. So it was just an up-down battle with them. And I was just kind of holding for the long term with those guys. And then Photo, God, I can't remember what that company was actually even called. And the only
it doesn't
reason
matter. I remember the ticker. None of these penny. Who cares what they're called or what they do? It doesn't. You're good. You're good. Don't even try to remember.
All right. So, I'm basically just holding all this stuff just, as a long-term investment. And, I started reading about this Timothy Sykes guy and how he made all his money shorting penny stocks. And he said he's basically saying 99.9% of all penny stocks completely fail. So I'm going to his page and reading his Profitly stuff, and one day I see he's talking about shorting this piece of crap ticker symbol, MJNA. Well, it scared me enough to decide to sell right around 31, 32 cents a share. So now I'm all out, and I didn't become a millionaire, but I was extremely happy with my gains, and this is where the problem kind of comes in. I kept reading the PRs and drinking the Kool-Aid and developing almost a hate towards this Tim guy for convincing me to worry enough to sell my shares as the stock's still moving up. So I feel like I'm missing out on all this money.
But he was saying to short at 31, 32 cents.
Yeah, he was basically saying I'm going to start shorting here. And I was kind of upset because, like I said, the stock's still moving up. And
that's the point I'm trying to get. Yes, I understand the business model of all penny stocks are garbage, therefore short them. But keep in mind, you have to short at the right spot, because with shorting, for you new listeners, just because a stock or when prices go up, you start to lose money very quickly on the short side. So yeah, I get the broad statement, penny stocks are garbage, therefore short them, make money. Well, people always forget, well, what happens if you don't short them in the right spot? You have to short them in the right spot. So this person saying short at 31, 30 cents, whatever, and the price is still going up, meaning anybody that listened to him at that point too short is now losing money. So I just want to make that distinction. So how much has this price gone up?
Well, it's at about 36, 37 cents a share now. I sold it, like I said, 31, 32. and I'm regretting never selling. So at this point, MJNA is, like I said, at 37 cents a share, and I decided that I'm not going to put all my gains back in it, but I believe this could run to $1, and I'm not going to take anything less. So I go ahead and buy again.
Did you buy the top?
Did I buy the top? No, I did not buy the top. I basically bought about 13 cents, 14 cents from the top.
So it was a good entry point, though. But you already gave away kind of your mindset, and that is, I'm not going to take anything for less than $1. So technically speaking, it could have gone up to 90, 95 cents, and you said, no, I want that $1, and
Yep.
it still wouldn't have mattered. So in your mind, you pretty much set yourself up for failure, because when you're setting that lofty expectation, like myself, when I was at least yours was at like 30 something cents. Mine was at like a penny and a half, and I'm like, I'm in this for the long haul. Dollar land, here we come. So, I mean, you can't get any dumber than my logic. So, but yeah, from a mental standpoint, yeah, you're kind of already screwed based off of that, mental goal of I want at least $1. So it went up 13, 14 cents, and from there, what happened?
Well, I was still drinking the Kool-Aid and reading all the PRs, and MJNA made it all the way up to 50 cents within a couple of weeks once I bought again. And I'm feeling pretty smart for ignoring all the bashers. Well, from there, MJNA just started to trickle down and down and down. And finally, it passes my entry point, and I'm starting to see red. Mind you, I'm still living underneath the Warren Buffett motto: the key to making money is never to take a loss. So a long story short, it gets back down to somewhere around 10, 12 cents a share, and I can't take it no more. And I'm thinking, I can't lose it all like I did with PPMIQ. So I finally bit the bullet and take the loss. And wouldn't you know it, I mean, the very next day, it makes another 80% move upwards.
So okay, well, I feel better now because I asked if you bought the top, but you just sold the bottom. So that's now I feel better, and now this is more in line with what I'm used to.
Yep. So I started whining and crying and kicking myself in the butt for selling, but decided I'm not going to make the same mistake. I just did by buying the top pretty much. So I'm going to be patient this time and wait to get back in around 11, 12 cents. If it gets back to where I originally took my loss, and I'll buy again. But I'm not buying as much this time. So that was my whole mindset at the time, that I'm just not going as heavy as I did the first time. Well, during this time, I was playing a couple other different tickers, and they're trying to learn as much as possible. And one day, I just happened to discover this funny-sounding robot who at the time was #1 followed member on iHub and offered some free video lessons on YouTube. Actually, he wasn't even using Clay Trader at the time. It was called bullwarriorstocks.com, I believe.
.com. Yep.
So does that sound familiar, Clay?
Does. Yep.
All right. I didn't even actually put it together that was you. I found this website that was actually doing videos on the ticker symbols I was watching. And then I started realizing that once you actually started putting out the videos where you were doing live trading and stuff like that, I started putting like 2 and 2 together. I was like, wait a minute, this voice sounds like this voice. So it kind of all hit me that the #1 followed member in iHub was the guy that owned bullwarriorstocks.com, and now doing his own thing on Clay Trader.
So I was on Clay Trader on YouTube at that point in time.
No, you were actually I think you just opened it. So it was
Okay, yeah. So this is somewhere right around 2013 then we're talking about in time then.
Yep.
Okay,
So-
yep. Makes sense.
So I started watching and listening and jotting down a few notes here and there and trying to learn as much as possible the different candlesticks, what the volume meant, what the MACD, RSI, money flow indicator, the Bollinger Bands, all these simple moving averages and all these different indicators meant, which I've never used before. So during that time, I was losing a bunch of money on MJNA. I happened to come across another ticker symbol that really piqued my interest, and that was FNMA, Fannie Mae and Freddie Mac. What really piqued my interest about this one was I already was familiar with who Fannie Mae and Freddie Mac were. Not only did I know them, but their stock used to trade around $60, $80 a share before the housing market crashed. And here it is now at 80 something cents a share. So I had a little extra money sitting off to the side that I didn't reinvest in MJNA, thankfully. And I knew that Fannie Mae had just recently made a big move from 20 cents up to 82 cents. But regardless, I was feeling pretty comfortable about buying at 80 cents because I thought to myself, this is going to just sit in my account for the long road. Well, within a month, it moved from 80 cents a share to almost $3. And I recall selling around 210-ish after a big gap down. So I was trying to average down and basically secure some profits and get back in at a lower price. And sure enough, Fannie Mae made it all the way back down to $1.50, around $1.50, and it continued to trickle all the way down from there to $1.20 something, which I almost got back out and took another loss, but I didn't want to lose all the gains I had just locked in. So by some kind of miracle, it shot back up, and I don't know if it was pure luck or some kind of unconscious intuition. But I rode that up to almost $7 a share. So during that time, I'm waiting on Fannie Mae to get back down to where I was wanting to buy again. Because, like I said, I was locking in profits at this point. And
Okay, so I had to ask. So as it went up to $7, you were selling some of your shares and taking profits.
No, once the stock got up to about $5, I started scaling out, and it made it all the way up to $7. And that's pretty much where I decided I was going to take off the final portion of my position, and then I was just going to buy back in because I started learning about the Bollinger Bands and how it was way overextended and whatnot. So I kind of had a feeling that it was going to pull back, and that's what I did. I just took all my whole position off the table and planned on re-entering once it got down to about $5.
So that was a very good trade for you.
Oh, very good. That was actually what really did, increase my portfolio the most. So
okay, so just kind of not necessarily fast forwarding, but you have a very good trade in FNMA. Kind of where did your journey head from here? Did you think you had the whole world figured out, or did you have another tough lesson ahead? Or where'd you venture from this point going forward?
Well, I had several tough positions. I had several different trades I made during that time, but the one that really stuck out to me again was ticker symbol MJNA was making its way back down to 10, 12, 13 cents a share where I originally took my loss at. So finally it got back down to I think 14 cents a share, and taking a bit more knowledge with me than the last couple times, I got back in around 14 cents, I believe. And at this time, I decided if it goes back up to 50 cents, I'm selling it all, because I didn't want to get, up to the top and then just crash on me once again. And sure enough, it made it all the way up to 48 cents where I had my sell order in because I was trying to slick Willie everyone. And sure enough, that was the top of that run. And that was in like 2013 or 14, I believe. And that's another funny thing is, my parents or my mom and her friend held that stock for, I can't even remember how long they held it for, because they got in, I think roughly at like 24 or 25 cents a share. And within a year, it had increased to where their $600 account was worth about $1,100 or $1,200 then. So I ended up selling their shares. I ended up selling my shares and pretty much just nailed the top. But
you nailed the top
about that.
Yeah, I was going to say you nailed the top of selling it.
Yeah.
Wow. So gone from selling the bottom to nailing the top. Well done. Well done.
But it doesn't end there. The problem is once it started coming back down, I, again, didn't take my whole entire, all my gains, but I did take a portion of it, and I bought back at 35 cents or so. And it started moving further down, and then I averaged down around 25 cents, and it just kept on trickling down and down and down. And sure enough, at about 15 cents yet again, I take another loss because I thought it was going to go back down to 10, 12 cents a share, and I didn't want to take the chance on losing any more than I already had again. So at that point, Fannie Mae was around $5 a share again. And being extremely comfortable with the company, and the gains I just made off of it, the record-breaking profit year it had that year. And it was supposed to be there was supposed to be a decision to release Fannie Mae and Freddie Mac out of conservatorship, and I took a bigger position than I before, and then it went down, and then it went down, and then it went down even further to where I couldn't take it no longer. So I finally sold for another large loss around the $2 mark, and that was pretty much where it was just like my account was a constant up, down, up, down, up, down. Make a bunch of money, lose a bunch of money, make a bunch of money, lose a bunch of money, over and over again. And at that point, it was kind of funny too how it worked, because my mom's friend that invested with her that just made over 100% in a year off of MJNA decided that she was worried that she was going to be put in a higher tax bracket. So what happened from there was they decided that they were just going to transfer all the funds and the shares that they owned in their account over to my account. So they just basically gave me everything they had, or everything I was investing for them. So, because I was pretty much managing their portfolio at the time.
So now you're in the hedge fund business.
Yeah, pretty much. And let's see, the very next day, like 2 days after I finally had the transaction go through to where their shares and everything were available for me to do what I wanted with them, Photo and Fannie Mae and everything went up again, and their $1,200 was now like $4,000. So I ended up selling, but then I ended up once again buying back in, trying to lock in profits and secure my gains, and then just get in at a lower price. And it just kept on driving down and down and down. And I actually ended up losing all $4,000 of that money. So like I said, it was just a constant up and down, make a bunch of money, lose a bunch of money. It was just over and over again.
So in other words, it was random results because you really didn't have a plan. Is that a safe kind of a moral of the story? Random results because you didn't have a plan.
Exactly what it was.
So I mean, interesting story, but I mean, how the heck did you get to trading options? Because we started this whole podcast with you talking about, your options trading. So let's talk options now. Where did the options, come into the picture and kind of come into the journey?
Well, basically what was going on was I was using Scottrade, and like, I don't believe I remember who it was, but every time I couldn't scale in, I couldn't scale out, because the biggest problem with Scottrade was the commission fees, and it would cost me like $7 per trade. Well, if I wanted to scale in and scale out, if I did 3 of those in one day, I was going to be flagged as a pattern day trader. So I realized real quickly that Scottrade wasn't the best choice for me as far as what I was wanting to do. And I also knew that the commissions were just eating up a lot of my gains. Not only that, but I never wanted to sell, because if I were to sell 3 times in a day, or buy and sell 3 times in a day, I knew that I wouldn't be able to trade for 5 days, and I didn't like that. And I was trying to pretty much just do exactly what I've been watching you do on YouTube, and it was just to the point where I don't know, I just couldn't do it. So once options started being talked about in the inner circle, I ended up closing out my Scottrade account, which that was a margin account. And
so you were a member of Inner Circle. When did you actually join the Inner Circle?
Let's see, I joined about 2 years ago. I think it was.
So you've been here for a bit then.
Oh yeah.
Okay, so I didn't realize. Okay, so through a lot of this, in other words, I want to make the point: just because you joined the Inner Circle doesn't mean that the money started to rain from the sky. Is that correct?
Correct.
Okay, just because you get some people that think, whether it's my service or anybody else's, well, just if I sign up for something, the money, it gets easy. No, I'd like to think that's a step in the right direction if you sign up for my service, but by no means does that imply that's gonna, change everything around for you. So Scottrade, you were trying to get around the day trader rule, and options is a good choice. So I mean, did you pick up the options course, or I mean, were you trying to teach yourself? How exactly did you kind of dip your toe into those options?
Well, my train of thought was, I'm going to join this inner circle, and you're going to tell me what to buy, when to sell, all that stuff. But, as most of us know, that's not the case. So I felt compelled to go ahead and purchase the PSSG, or Penny Stock Survival Guide. And then from there, I purchased Robotic Trading.
Now,
And
did
I just
the penny stock course, did that open your eyes? The Kool-Aid you had been pretty much hooked up to an IV from, the previous couple of years?
Oh, absolutely. That was a game changer right there, because it was just something that I wasn't even considering. I mean, all that information that he was basically telling me, I didn't take it into account. So,
But you could relate to it. It actually all made sense.
Oh, absolutely.
Isn't it weird how like stuff you're like, oh yeah, that totally makes sense, but before you knew it, like you didn't notice it at all, even though it was kind of sitting right in front of you? That is that, don't you think that's kind of weird? I always found it kind of weird. Like, how did I not know this stuff? What was I thinking?
Yep.
It's nuts. So got through robotic trading, and then where'd you go from there? Were you thinking you wanted to just jump right into options, or did you think you needed to kind of get a little bit more training under your belt?
No, I pretty much focused in on volcano trading, and then what's the other one that
Trampoline?
Trampoline was another one that I just kind of focused in on and try to just perfect those skills. So I started watching all your videos that were in the course, and I just got hooked. I absolutely love the way you broke it all down. I mean, you put a whole new meaning to "so easy a caveman could do it." And I always been a big fan of that old saying you use it a lot: keep it simple, stupid. Or like when my dad was teaching me how to design sprinkler systems, our goal isn't to make sure that people understand what we were going to do when looking at our blueprints. Our goal was to make sure that no one couldn't misunderstand what we were going to do. And that was key. I mean, you made it to where it was so easy to understand the way you broke down the whole stock market and how it worked and the psychology behind it and whatnot. So it was just a huge eye opener.
So
Good. I do want to make a little distinction, though. I made it easier to understand. So, I mean, I don't want people to sign. Well, this guy named Adam says that if I sign up for one of Clay Trader's courses, that he makes it so easy that I'm going to be a millionaire trader. You're just saying it made it easier to understand things, right?
Correct.
Because I want to just be transparent. We're not trying to say that Jan's not trying to say that if you sign up for a course, then you automatically know how to trade. It's easier to understand what you should be doing. Is that an accurate statement?
Absolutely.
Okay, perfect. So sorry to cut you off. I just want to make sure that we made that little distinction. I don't want people to get the wrong idea that we have the Holy Grail. We do not have the Holy Grail, and that's not what you were saying. I just want to clarify that. So you're going through the courses, you're understanding better, and kind of when did you finally make that first options trade?
Well, after diving headfirst, night after night, Monday through Friday, into those two courses and quickly falling in love with the whole atmosphere of the inner circle, I was pretty eager to learn more as much as I could. And I figured the smartest decision financially was to suck it up and bite the bullet and purchase the CTU membership. Which, again, I just dove headfirst into all the courses, watching day in and day out, I literally think that I might have made it through all the courses in a matter of a week and a half or so. And some I've even watched more than once or twice. I would watch the course and try to recognize the patterns I learned the night before. But at this point, I still had Scottrade as my online brokerage account. So I tried using them to buy my first option. But again, I was paying like $850 a contract or something like that, and it would go against me, and I would buy another one and another one. Since it was a margin account, I was still going to be flagged as a day trader if I sold those 3 contracts in the same day. So I just knew that wasn't going to work out. But the first option I traded, I think I took like a $47 loss, and as soon as I took the loss, it again reversed and went right back up to where I would have made a profit. So I just kind of knew that I had to be a little bit smarter with my entry points, because there wasn't no way to figure out when the stock got to a certain point on the chart,
I didn't know what the option was going to cost. So I was buying way too high before it was even at the price point I was wanting to buy at, as far as the stock.
So you bring up, not to cut you off, but I want to, really stress to our listeners that the problem you were having was the fact that you needed to kind of utilize, being able to read the chart and using technical analysis prior to, entering the trade. And that trade doesn't matter if it was either an equity trade or an options trade, because like you said, you kind of pick something in a reverse, right in your face. But you were smart enough to realize that your entry points were the problem. But I just want to kind of really stress that, some people think they can dive straight into options without learning how to read charts, and it's really not the case. You really have to be solid on, being able to read that first.
Yeah, and understand the deltas and the vega and everything like that goes along with it. That was a big thing I wasn't really focusing on at the time either.
So where are you at, now in your trading? What sort of strategies? I don't want to. I will say this though. One thing I like about you is you're very transparent. I mean, you're always posting your screenshots, whether you're making money or losing money, and I'm happy that vast majority of the time you're making money. So what kind of strategies do you have? Any favorite indicators that you're using right now, or kind of what's your kind of go-to setup? When you're looking at the charts and kind of making your trading decisions.
Well, basically, I just try to emulate what I've been learning from you over the past couple of years, Clay. I mean, I like the best setups I like are the gaps, gap ups or gap downs. I wait for the pullback. I like to pretty much scale into positions now instead of like, with Scott Trade, I pretty much had to nail the bottom or nail the top of where I wanted to get in, because if I had to buy more than once or twice, I mean, it was going to cost me, like I said, that whole pattern day trading rule. So, now I use the MACD, which I never used before, the volume indicator, and the RSI is my three biggest indicators. That along with price action, of course. But that's I like playing the breakouts as well, and that's basically all I really play. I don't play much other than that.
Hey, you found what worked, and you just keep doing it, because like Clay said, we enjoy that we see many more green days and much smaller red days. Obviously, you're doing very well at managing your risk. But I think something that'll probably be a very eye-opening compared to when you first started trading. How do you mentally kind of deal with the loss? I know you originally adopted the Warren Buffett, don't lose money, and if you forget that, go back to rule 1 and don't lose money. How do you mentally deal with taking a loss now versus when you first started trading?
Well, back then I didn't take a loss. I never sold.
So it's a good step in the right direction that you actually take losses now. But yeah, I'm very curious on this too, because you used to have this mental philosophy of Warren Buffett. So yeah, I mean, what's going on upstairs now when it comes to those losses? I mean, you take them, but how does it feel? What does it make you think? All that sort of stuff.
Well, the most important thing I learned from it all, watching your courses and whatnot, was to already have a stop loss put in place before entering the trade. So now it's it's a managed loss. It's not like, oh my God, I'm freaking out, panicking, selling at the very bottom when it's probably going to roll back up here in a matter of a couple of minutes or hours. So. I don't remember who said it, but it's almost like taking a speed. It's almost like hitting a speed bump in your car now. It's no big deal. Just hit the bump, move on, keep driving.
I do remember that. I don't remember. Maybe that was Doc, or I don't know. I'm not. Do you remember, Ches?
No, I don't.
But that was a good little analogy on their part. So that's awesome that you've gone from the mindset of pretty much losing makes you a bad trader to now you're just like, whatever, losing happens. There's no such thing as a perfect trader, and you just kind of move on from there. So, I mean, I know you might have your own time machine, given that you were so early to the penny or the marijuana boom. But Ches does have one in case you don't want to use your own. If you could go back into time and give yourself some advice right when you were getting started, what would that bit of advice be?
All right, so if I could go back in time and give myself one piece of advice, it would be pretty much as simple as it gets. Get educated, and don't put all your eggs in one basket, meaning don't invest 100% of your portfolio into a stock, especially a penny stock that is about to claim Chapter 11 bankruptcy.
I think that's pretty well said there. But yeah, I'm sorry it's taking me so long to respond. I'm actually putting my entire account in Priceline options right now. So, but
Far out of the money ones, right? Those
the
ones that are trading
farthest
for a
out of the
penny?
money that expired today on this Friday that we're doing this podcast.
We
Yep.
you got what is that? 67 minutes before they expire. So
Yep. Yeah.
yeah.
But so these are the next question I'm going to ask you. Pretty much determines if Clay decides to let you stay in the community or bans you immediately. But what is your favorite movie?
My favorite movie, I guess, would be well, I guess it's a little cliche, but The Wolf of Wall Street or The Internship.
The Internship, isn't that with Owen Wilson and Vince Vaughn?
Yeah, when they're
That,
working.
that
at
one's
Google.
not that one's actually kind of new. So
Yeah,
Uh.
I liked it because of the part where he's like on the line, on the line.
I don't remember that. I've seen it, but I don't remember any of the quotes. But yeah, and I used to try to do quotes, but I've been on such a losing streak that at this point in time, I've kind of
It's just
unless it's
embarrassing.
Dumb and Dumber.
It's just embarrassing.
Yeah, it's just embarrassing. I agree. I don't think it can be any more simply put than that. What about food wise? I know you're out in Missouri, so I don't want to steal your thunder, but are you a big barbecue fan, or what kind of food do you like to eat?
I'm a pretty much just nothing but meat eater. I mean, I like steak, whether it's pork or beef, doesn't matter, or good chicken wings.
Now, what about for dessert? What do you top it off with?
Dessert,
Yeah, the stuff that
guess
has
it's
lots of sugar in it.
a chocolate shake from Steak and Shake. I always can go for, or a ding dong, or
You
That's
are
really
a ding
about it.
dong, or you like to have ding dongs for dessert?
I might be a ding dong.
So sometimes I wonder, seeing you with some of your. I will say this: that joke you played on your mother put you into the ding dong category. That was cruel. Can I tell people about that, or would you like to keep that on the down low?
Oh no, you can tell people about that.
So 2 days ago or yesterday, Jan hopped on his paper trading account within Interactive Brokers, which, by the way, I don't know if you ever, but that's how you fixed your Scott trade problem, right? You hopped over to Interactive Brokers.
Yeah, that's what I mean was a game changer for me. I mean, now I can sell and buy as much as I want in a day, and then do the same thing over tomorrow, and I don't have to wait for 5 days. So
Excellent.
that
excellent.
was, and
So
the commissions.
Yeah, and the commissions, penny saved is a penny earned. You're making all kinds of money just via the money that you're saving. But so he's on Interactive Brokers. He hops on his paper trading thing, and I don't know how you did that, but he made it look like he had a $13,000 loss, and he posted it in the room. And I'm going to pat myself on the back here because I know you're a ding dong, and I called you out. I'm like, I'm pretty sure he's just trolling us right now. And you did admit it, which is fine. It's have a little good fun. It was a lounge, whatever. But then you tell us that you showed it to your mom, who was
Your poor mother.
yeah, your
poor
mother probably freaked out. I mean, as a joke. So yeah, you are a ding dong for that move. But she
Been
did
doing
freak
it
out,
for
right? Like, is
29
she okay? She didn't have to go to the hospital or anything.
Right, she's okay. I've been doing it for 29 years, so she
Well,
probably didn't believe.
Mrs. Yansky, I bless your heart for putting up with this ding dong son for as many years as you have. So I don't know if you do listen to this, you're a saint. So well, I don't even know what we were talking. We were talking desserts, which tangents are an amazing thing. How you get off topic, but I don't know if you like to travel or not, but let's assume you do. Where's someplace you would like to visit someday?
Well, I've been to Costa Rica. I've been to Cancun. I even been to Canada, which I love. Believe it or not, I don't know if Hooch is going to hear that, but
Oh, he'll hear it. He'll hear it.
I was a big fan of Canada. I go to Florida a lot. Well, I haven't been there for a long time, so I don't know anymore. But I go to Florida quite a bit. My girlfriend's dad lives down in Fort Myers, so we go there like 3 or 4 times a year. But I've never been out west, so that's one place I would like to travel is to go check out California, or the farthest I made is Las Vegas. So I would like to go a little bit further west than that.
Well, there's plenty of space. It's very expensive out here, but there is plenty of space. Now,
Or
so
Belize is a good place.
yep. Now, what do you do for fun or hobbies outside of the market? I know we heard some dogs in the background a little bit earlier. Are you a big dog guy?
Yeah, I got a chocolate lab. I just had a litter of 10. I love to hunt, so therefore I'm a huge gun advocate. I spend a lot of time at the range target shooting. I spend a lot of time training my dog to hunt with me, and soon to be training a new member of the family. Going to one of our family's farms or lake house, I enjoy doing that. or hanging with friends and families and just having a couple beers. That's always a good time.
So you just like to kick it and shoot stuff.
Yep, that's pretty much my life.
That sounds like a good time. I did some shooting a couple weeks ago over Labor Day, and I guess that probably doesn't make much sense because by the time this airs, it wasn't a couple weeks ago. But anyways, on Labor Day, I tried to do some shooting, but it wasn't very good. My stop loss got hit quite a bit. I'll just put it that way. So for the final question, 3 words, the 3 words that you would use to describe what you would associate with a successful trader.
Well, the obvious ones, be disciplined. The other one I would say is be methodical.
Ooh, I like that.
And being pragmatic.
Define that.
Pragmatic? It's dealing with things sensibly.
In terms of trading, give us an example of how you could be pragmatic with trading?
Like dealing with things sensibly and realistically in a way that is based on practical rather than theoretical considerations, meaning don't just think that a stock's will go at this price. There has to be some kind of logical reason behind that thought.
And it is okay to take a loser, right? You're being very practical. A practical person is going to admit to themselves that they're not right 100% of the time. So there's another little leeway there. So good words, here we go again, Ches. He kicks off our little kind of pre-conversation with, this isn't going to be very interesting. I don't have a very interesting story. I thought this was pretty interesting. What did you think, Ches?
I thought this was very interesting, and I knew it would be prior to going in, but everybody likes to say that, this is going to be boring. This is going to be boring. No, it's not boring. Everybody's got their own unique stories, and it's awesome to hear.
Especially when you know the guy that you're interviewing is a ding-dong. So, I mean, that was the one guarantee that I didn't want to tell him is, look, dude, you're a ding-dong. This is guaranteed to be entertaining. So, but in all seriousness, thank you so much for, it's Friday right now as we're recording this. So I appreciate you taking some time out of, the day before the weekend.
No problem, Clay. It was a great time.
Now, I don't think you're ever really nervous, so I guess I can't really give you a hard time about that. But in all seriousness, thank you so much for hanging out. And if you were listening and you had a good time with us, I'd like for you to do a few things. If you're listening to this on the website, claytrader.com, click one of those share buttons, leave a comment below. We do read those, and I'm sure Adam would be more than happy to interact with you if you have any additional questions for him. If you're listening to this on iTunes, please leave us a rating and a comment. Those really go a long way, and that's kind of the feedback that we're using on whether or not we should keep making these things, or if people don't even care anymore. So feedback is definitely welcome. Thank you again for hanging out with us, and get out there, trade without emotion. We will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.